gold standard. Everybody's kind of familiar with that term, but it's a little hard to understand what it actually did. But it was an interesting concept. It said that the US could print dollar bills equal to the amount of value that we have in gold stored in Fort Knox. And it was such a pure valuation that citizens for a time could actually exchange. They could take a $20 paper bill and get $20 worth of gold. So it was a very pure exchange of the paper representing value of the United States. So that ended during the Nixon administration in the 70s. And I believe that that was the beginning of Congress just feeling they could spend anything they wanted to because we weren't on the gold standard anymore. They could just put out effectively dollar bills, buying goods and services for the government, but without that value behind it. So then you have a kind of an interesting question, a rhetorical question for you and your audience that I kind of like, which is, well, the government, the United States is, by some definition of more debt than assets, we're bankrupt. But if the U.S. is bankrupt, then how can we have the strongest, biggest economy in the world? Kind of doesn't make sense. We're 30% bigger than China. And catch this, Ken, we're 15 and a half times bigger than Russia. Russia, it's kind of interesting. Russia's actually 25% smaller in the size of the economy of Italy.
Interesting.
Yeah.
Interesting. Yeah.
But the answer to that question is, well, we all kind of know in our gut that the United States is so powerful, is so strong, and really has assets that we're going to pay off our debts. We're going to pay interest rates on our treasury bills. We're not really bankrupt. So it made me look at this through the eyes of like a business guy. I've been in business over 40 years and I've dealt more with accountants than I care to talk about, but I understand accounting, and under accounting principles, normal accounting principles, if we look at the United States as a corporation, kind of is, then we say, well, the U.S. has a lot more assets than just its gold. So it's got lands and parks and mineral reserves and planes and ships and military installations and housing and military installations. I've said that, hospitals, schools, all kinds of things where the amount of assets owned by the United States far outweighs the amount of just its gold. So looking at this in accounting terms, we have all these assets that are not just gold. So I created what I called the asset standard instead of the gold standard. So now if we use the same principle, the same idea of the gold standard that allowed us to put out dollar bills, the asset standard lets us do the same thing. It lets us effectively write checks that represent the value of the currency. So we send a check for $1 trillion to China because China has $1 trillion of debt of the United States. They've bought U.S. treasuries just like you and your family can buy treasuries. So we send them a check with a thank you note. Thanks very much for loaning us money. We're paying you off, and have a nice day. And we do that with everybody. We send, your Aunt Shirley a check and everybody else. Now the question becomes, will they cash the check? And will it clear? So your Aunt Shirley in China are going to run to their bank and deposit those checks as fast as they can. And then they will clear because they're written on the Bank of the United States, the Federal Reserve Bank, who clears checks. So we just paid off the entire U.S. debt, and under really accepted concept of gold standard, asset standard.
Well, let me question that. Okay, so if we use that, okay, pay off that $1 trillion check, right? We got to print money, okay. And what so we're going to print $1 trillion in cash or whatever to pay off that debt. Is that Is that accurate?
Well,
I mean,
it's
it's got to come from
it's the same as writing a check. So if you say a check is like printing money, yes.
Yeah. Okay. So if we print more money, isn't that going to be inflationary? I mean, we're talking about 28 trillion in debt. Isn't that what's that going to do to our economy?
Normally, you're absolutely right. Normally, when the government spends money, it's inflationary.
Yeah.
But this is money that's been loaned to the U.S. that the government already spent.